When people hear Elon Musk and payments in the same sentence, their minds automatically flash back to PayPal. It's like the anchor point. Elon co-founded X.com back in 1999, which later merged with Confinity to become PayPal, and that platform went on to transform online payments forever. But here's the thing most people miss. Elon never actually let go of the original vision behind X.com. For him, it wasn't just about creating a way to send money online. It was about building the backbone of an entirely new financial ecosystem, a digital financial super app. Now fast forward to today, and Elon owns Twitter, which he's rebranded into X. That's not some random branding decision. It's a callback to his earliest dream, X.com as a universal financial platform. If you look closely, the signs are everywhere. He said multiple times that he wants X to become the everything app. And if you're paying attention to where the world is heading, that means payments are going to sit right at the center of it. But here's the twist. The payments world of 2025 isn't the same as the payments world of 1999. Back then, you just needed to make credit card payments work online. Today, we're talking about moving money instantly across borders in multiple currencies with almost no fees and doing it all on-chain. That's where Stellar comes in. Now, let me pause here because this is important. Most people assume Elon is only interested in building something that benefits Tesla or SpaceX or Neuralink. But Elon is also a pragmatist. He knows if X is going to compete with WeChat in China or even Apple Pay in the US, it needs to run on an infrastructure that's not just fast but global. Visa and MasterCard are great, but they're legacy systems. They weren't designed for the world of tokenized assets, CBDCs, or stablecoins. Stellar, on the other hand, was literally built to be that neutral global payment layer. Think about it. Stellar is already working with central banks on CBDC pilots. It already has stablecoins issued on its network, USDC being the big one. And unlike Ethereum or Bitcoin, it was designed from day one for payments and remittances. Low fees, fast settlement, and a built-in decentralized exchange for swapping assets. If you're Elon and you want a payments backbone for a global super app, why reinvent the wheel when Stellar's infrastructure is sitting right there? Let's talk psychology for a second. Markets often overlook these things until suddenly they don't. Right now, everyone's obsessing over ETFs, AI coins, and meme tokens. But what really drives adoption in the long run? It's usability. If millions of people are using X every single day for communication, and suddenly Elon rolls out peer-to-peer payments natively integrated into that platform, that's instant adoption at scale. And if the rails underneath those payments happen to be Stellar, then overnight Stellar becomes the quiet backbone of a global money movement network. It's kind of like how most people use the internet without ever thinking about TCP, IP. They don't know it, they don't care, but they use it every single day. Stellar could play that same role. The invisible infrastructure that powers Elon's everything app. Now let's zoom out. Elon is a master at playing both sides of a market. On the one hand, he knows hype drives attention. That's why he plays around tweeting about Dogecoin. It's funny, it's viral, it keeps people hooked. But behind the scenes, he's serious about real infrastructure. Tesla runs on real factories, real supply chains, real software. SpaceX runs on real rockets and satellites, not memes. If Elon wants X to be the financial backbone of his empire, he's not going to build it on a joke coin. He's going to build it on a network that can actually move billions or trillions of dollars efficiently. And here's where Stellar fits the bill better than most. Ripple is still tied up in regulatory baggage. Ethereum is powerful, but it's bloated and expensive. Bitcoin is untouchable in terms of brand, but it's too slow and too rigid for payments at scale. Stellar is lean, fast, and regulatory friendly. That last point is crucial. Stellar has spent years positioning itself as the compliant blockchain for finance. It works with governments, NGOs, and big financial players. That makes it the perfect choice for someone like Elon, who knows regulators are already watching his every move. Imagine this scenario for a second. Let's say you're in Germany and you've been using X for years to follow news, chat with friends, or build your business audience. One day, Elon introduces XPay, a native payment system inside the app. Suddenly, you can send money instantly to a friend in the US, and they receive it in dollars while you paid in euros. Behind the scenes, Stellar's decentralized exchange handled the conversion. To the user, it feels seamless, just like sending a DM. To the world, it's a revolution in cross-border payments. And the craziest part? People won't even know they're using Stellar. Just like most people don't know their Netflix stream is running on Amazon Web Services. Adoption at scale doesn't always come from brand recognition. Sometimes it comes from being the invisible engine that powers the brands people already trust. Now, let's ground this with a real-world reference. Look at WeChat in China. That app isn't just social media, it's payments, shopping, messaging, even government services. The reason it works is because it became indispensable. People can't function without it. Elon is chasing the same model with X, and payments are the glue that makes it all stick. Social media is optional. Payments? That's daily life. If you nail that, you own the ecosystem. So when people ask me, why Stellar? Why not just build it all from scratch? I point them to history. When Amazon wanted to expand e-commerce globally, they didn't build their own delivery trucks from scratch. They leveraged FedEx, UPS, DHL. When Apple wanted to dominate music, they didn't build every song library themselves. They signed deals with record labels. In business, you partner with infrastructure that's already working. Stellar is that infrastructure for payments. And here's the kicker. Markets haven't priced this in yet. They're too busy chasing short-term narratives. But once you see Elon's long-term moves, it's hard not to connect the dots. He doesn't think in months. He thinks in decades. And Stellar aligns perfectly with his vision for a global financial backbone. The psychology here is fascinating. Most retail investors operate on emotion. They chase pumps, they panic on dips, they fall for shiny narratives. But Elon, he plays the long game. That's why he bought Twitter outright. That's why he rebranded to X, even when people mocked it. He knows brand power. He knows ecosystems. And if he integrates Stellar, whether openly or quietly behind the scenes, that becomes a trillion-dollar opportunity sitting in plain sight. We can't ignore regulation either. Europe's already rolling out MiCA, the world's first comprehensive crypto regulation. The US is still fumbling, but make no mistake, when Elon moves into payments, regulators are going to pay attention. And here's the beauty of Stellar. It's already positioned as regulator-friendly. It's not fighting the SEC in court like Ripple. It's not plagued with DeFi hacks like Ethereum. It's lean, it's clean, and it's built for exactly this purpose. So here's the bottom line. Elon Musk's vision for X isn't just about reinventing social media. It's about resurrecting his original dream for X.com, a universal financial ecosystem. The difference is that now, in 2025, he has the tools to actually pull it off. And Stellar, with its speed, low fees, and regulatory-friendly design, is the perfect infrastructure for him to do it. The markets haven't woken up to that reality yet. But when they do, the psychology shifts and adoption follows. Now, let's go a bit deeper into what's really happening here, because when you talk about Elon Musk, X, and this subtle but steady integration of blockchain rails into mainstream platforms, it's not just about tech. It's about psychology. It's about people's behavior. And it's about how adoption creeps in without most people even realizing it. Think about how PayPal rolled out crypto features in 2020. At the time, there wasn't a huge announcement saying, "We are revolutionizing payments forever." No, they just quietly said, "Oh, by the way, you can now buy Bitcoin, Ethereum, Litecoin, and Bitcoin Cash here." And at first, people didn't take it that seriously. They thought it was a gimmick. But what happened? A couple of years later, millions of users had touched crypto in some form, simply because it was in the same app they already trusted to send money to friends, buy things online, or manage transactions. This is the exact same playbook Elon Musk is using with X. He doesn't need to say outright, "We're building the world's biggest blockchain payments hub." Instead, he's slowly layering in features, licenses, and infrastructure. He's nudging users toward the possibility of handling digital value on the platform. It's not about the tech headlines, it's about quietly normalizing behavior. And here's where psychology comes into play. Most people are resistant to change. If you tell them, "Hey, abandon your bank account and start using this new blockchain wallet," they're going to hesitate. They'll worry about safety, complexity, volatility. But if you say, hey, you already use this app every day to chat, to watch videos, to follow news, why not also use it to send $20 to your friend or split a dinner bill? Suddenly, it doesn't feel like a leap. Feels natural. That's the genius of integrating blockchain rails into something like X. You're not asking people to download a new app, trust a new company, or learn a new system. You're just expanding what they already know. The European case study. Let's pause for a second and look at Europe, because Europe is a fascinating test case in this story. Europe has been moving toward a more unified payments infrastructure for years. Think about SEPA, Single Euro Payments Area. It was designed to make cross-border transfers within Europe as easy as domestic ones. That's a major step toward harmonizing financial behavior across dozens of countries. But here's the thing. Even with SEPA, people still run into friction. Transfers can take time, fees still show up, and not all banks play nicely together. Now imagine if you layer Stellar or a similar blockchain rail under that existing system. Suddenly, moving money between Berlin, Paris, and Rome becomes instant, cheap, and reliable. That's a massive upgrade. Now, tie this back to X. Elon Musk has a European user base on X that's not just big, but deeply engaged. If X starts offering a way to send money seamlessly across borders, and it happens to run on blockchain infrastructure like Stellar, adoption could happen much faster than regulators or banks expect. This isn't about convincing hardcore crypto enthusiasts they're already sold. This is about getting average users in London, Madrid, or Amsterdam to say, wait, I can send 50 euros to my cousin in Germany instantly on X? That's easier than my bank. That's adoption. The American angle. Now, take the American perspective. The US financial system is robust, but it's also fragmented and outdated in many ways. ACH payments still take days to clear. Wire transfers are expensive. Checks are still used in 2025, which is insane if you think about it. But Americans are already used to super apps in other parts of their life. Think about Venmo, Cash App, or even Apple Pay. These services have trained people to expect convenience. But here's the catch. They're all siloed. A Venmo user can't easily send money to a Cash App user. And Apple Pay doesn't natively connect with either. The rails don't talk to each other. What happens if X, a platform that already has a massive, built-in user base across different demographics, becomes the connector? Suddenly, you're not siloed. You're not limited to one walled garden. You can move value across borders, across apps, across systems. That's where blockchain shines. It breaks down the silos. And here's where Stellar makes sense. Stellar was literally built for this. Its entire purpose is to make money move as easily as email. Fast, cheap, borderless. It's not about speculation. It's about function. And that's exactly what Elon Musk has always been about, function first. The trust factor. Now, let's zoom out and talk about trust, because this is the real barrier to adoption. Technology can be perfect on paper, but if people don't trust it, they won't use it. Think back to the early days of online shopping. In the late 90s and early 2000s, people were terrified to put their credit card online. They thought, what if someone steals my number? What if the website is a scam? Today, nobody thinks twice about ordering on Amazon or booking flights online. What changed? Trust was built. Slowly, through reputation, regulation, and experience. The same process is happening here. Right now, a lot of people still think of crypto as risky, speculative, or shady. But if a platform they already trust, whether that's PayPal, Stripe, or X, offers blockchain rails under the hood, the trust transfers. They're not trusting a random token. They're trusting a company they already use. That's a massive psychological shift. And this is why Elon Musk is such a pivotal figure. Whether you love him or hate him, people pay attention to him. If he validates blockchain rails as part of X's infrastructure, it's a signal to millions of users that this is not fringe anymore. This is mainstream. Adoption through utility, not hype. This is where I want to hammer down on a crucial point. Adoption won't come from hype. It won't come from Elon tweeting rocket emojis or people shouting to the moon. That's speculation. That's short-term. Real adoption comes from utility. This is the bank itself. When the biggest bank in America is investing heavily in blockchain rails, the narrative that crypto is a fad collapses. Because the people who run trillions of dollars are literally betting on this infrastructure. Now let me be clear. Neither BlackRock nor JP Morgan care about whether a retail trader doubles their money on some meme coin. They don't care about hype cycles. They care about efficiency, compliance, and long-term returns. And what they're doing signals to the entire financial sector that blockchain is not going away. In fact, it's becoming invisible, the rails underneath everything else. That's the long game. So where does Stellar fit into all of this? Stellar has always positioned itself as the blockchain for payments, for stablecoins, for real-world assets. It's not trying to be the chain for NFTs or gaming or whatever's trending. It's trying to be the rails. And when you have BlackRock tokenizing funds and JP Morgan tokenizing collateral, where do those assets need to move? On rails that are compliant, fast, and scalable. Stellar checks those boxes. Add MiCA's framework in Europe, and suddenly you can see how this alignment starts to make sense. But let's pull back and look at the psychology for a moment. Because adoption isn't just about technology or regulation, it's about perception. In Europe, for example, consumers are already used to strong regulation around finance. They expect oversight. They expect consumer protection. That means when a regulated digital asset platform launches under MiCA, average people will be more comfortable using it than something that feels Wild West. In the US, trust comes more from brand names. If JP Morgan offers tokenized assets to its clients, people will say, if my bank is doing it, it must be safe. That's how mass adoption happens, not with white papers or roadmaps, but with trust. Now, let's be realistic. Not every chain is going to survive this transition. We've seen hundreds of projects launch with big promises only to vanish when the hype fades. The long game isn't about which token pumps the hardest in a bull market. It's about which chains get integrated into the financial system's plumbing. And here's the truth. Institutions aren't going to build on 10 different chains. They're going to pick a handful that meet regulatory standards, scale efficiently, and integrate seamlessly with existing systems. That's why MiCA matters. That's why BlackRock matters. That's why JP Morgan matters. They are the filters. And if Stellar is part of that handful, it doesn't just survive, it thrives. Now, some people worry about risks. They say, what if regulation kills innovation? What if the volatility scares people away? What if adoption takes longer than expected? Those are valid concerns. But here's the counterpoint. Regulation doesn't kill innovation, it legitimizes it. Volatility doesn't scare institutions, it gives them trading opportunities. And adoption might take time, but look at the internet. It took decades for the internet to become invisible infrastructure. The same thing is happening here. The long game isn't about months, it's about decades. And that's where we wrap this story. Because in 10 or 20 years, nobody is going to be talking about whether blockchain has potential. They'll be using it every day without even realizing it. Just like nobody talks about using the internet anymore. We just use apps, send emails, stream movies. Blockchain will fade into the background, powering payments, settlements, investments, and more. And when historians look back, they'll say the turning points were things like MiCA in Europe, BlackRock's tokenization pilots, JP Morgan's blockchain experiments, and the quiet work of networks like Stellar laying the rails. The irony is that retail investors often obsess over price charts, while the real game is being decided in boardrooms and parliaments. The traders chase candles, but the institutions build the highways. And that's why I keep saying, don't just watch the noise, watch the signals. MiCA is a signal. BlackRock is a signal. JP Morgan is a signal. These are not accidents, they are milestones. So if you zoom out, what you see is this. The quiet revolution is already here. Regulation in Europe is giving clarity. Institutions in America are testing tokenization. Networks like Stellar are positioning themselves as the rails. And slowly, without the hype, without the noise, the financial system is being rebuilt on blockchain. That's the long game. And when the dust settles, the people who paid attention, not to the noise but to the signals, will be the ones who saw it coming. from people actually using the technology because it solves a problem in their lives. That's what Stellar is designed for. That's why this conversation around X is so important. Because if blockchain integration happens here, it's not about speculation. It's about solving real-world problems like remittances, cross-border transfers, and instant peer-to-peer payments. Now, if you want to see how this looks in practice, think about immigrant workers in the US sending money back home to Mexico or the Philippines. Right now, they use services like Western Union or MoneyGram, and those services take huge fees. But what if, instead, they could send money instantly through X, riding on Stellar rails with negligible fees? That's life-changing. That's not hype. That's utility. And this is exactly how adoption sneaks in, not through headlines, but through quiet, practical solutions. So, let's talk about what's really going to determine the future of this entire space, the long game. Because look, hype cycles come and go. Retail traders rush in, then get burned, then disappear for a while. We've seen it in every cycle. But the forces that quietly decide what sticks around aren't tweets, aren't influencers, and aren't even retail speculation. It's regulation, institutional adoption, and whether the technology becomes part of the financial system's backbone. That's the story that's playing out right now in Europe and America, and it's the one that people are going to look back on in 10 years and say, oh, of course that was the turning point. Let's start with Europe, because this is one of the rare moments where Europe is actually ahead of the United States in terms of crypto regulation. Usually, when we talk about finance and innovation, the US is the one setting the pace and Europe plays catch-up. But with MiCA markets in crypto assets regulation, Europe has put itself in the driver's seat. MiCA is not some half measure. It's the first comprehensive framework that basically says, here's how digital assets can legally exist and operate within the EU. That's a big deal because, for the first time, institutions, banks, and businesses in Europe have legal clarity. They know the rules. They know what counts as a utility token, a stablecoin, and a security token. And once you remove uncertainty, that's when serious money steps in. Think about it. A bank in Frankfurt, an asset manager in Paris, or a fintech startup in Amsterdam can now actually plan long-term because they know how MiCA treats stablecoins, how custody should be managed, how consumer protections need to be enforced. It's not about whether the regulation is perfect. It's about the fact that there is regulation. And in finance, clarity is oxygen. Without it, institutions hold back. With it, they dive in. That's why MiCA might end up being remembered as one of the most important milestones in crypto's entire history. Not because it makes headlines with retail traders, but because it opens the door for regulated adoption across a continent of 450 million people. Now contrast that with the US. The US has been dragging its feet, arguing over whether crypto tokens are securities or commodities, watching the SEC and CFTC wrestle for jurisdiction, and leaving companies guessing. That kind of environment makes institutions nervous. They don't want to build billion-dollar platforms if they think the rules might change overnight. That's why you see some US firms experimenting but not committing fully. Meanwhile, Europe has basically said, here's the playbook, and that clarity will attract capital. American firms don't want to miss out, so even if Washington keeps arguing, Wall Street will find ways to build because they see Europe moving ahead. And speaking of Wall Street, let's bring in BlackRock, because when the world's largest asset manager moves, the entire industry follows. BlackRock manages over $10 trillion in assets. That's larger than the GDP of most countries. And what have they been doing? Testing tokenization. They've already issued tokenized money market funds. They've openly said blockchain rails are the future of asset settlement. Now, think about that for a second. If BlackRock is exploring how to put trillions of dollars worth of assets onto blockchain rails, what does that tell you about where this market is going? They're not experimenting for fun. They're not running pilots because they're bored. They're doing it because they know tokenization can cut costs, reduce settlement times from days to seconds, and unlock liquidity in ways the traditional system can't. Then there's JP Morgan, another giant. JP Morgan has been running its Onyx blockchain division for years now. They've processed billions in tokenized transactions. They're experimenting with tokenized collateral in repo markets, with instant settlement of securities trades, with cross-border payments that don't need SWIFT. And this isn't some tiny startup trying to disrupt the banks.